So let's take our conversation forward on what is the secret sauce for Tata Consumer for the quarter gone by, and is the worst in terms of margin and in terms of the environment is that behind us. Sunil D'Souza joins us, Managing Director and CEO with Tata Consumer. Sunil, good morning. Thank you for joining us. These numbers are good, solid, and they deserve a table, thumping applaud. It's a rarity when we say that FMCG companies are beating estimates. So how have you managed to beat the peers and analyst estimates?
So Nikunj, always nice to talk to you, and thanks for the compliments. I do think we've delivered a decent set of numbers. Just to highlight, top line was up 11, EBITDA was up 30%. Group net profit, we did say a -7, but if I offset the one-time land sale that was there last year, net of exceptionals, we're up by 24%. EBITDA is up 220 bips. We're seeing volume growth across all the businesses. Growth businesses in India are firing at 40, international is up 13. Gross margins across all businesses, more or less where they should be, bar the US where we've got a little bit of work to do. Financial numbers, our working capital is down by about 2 days. Cash flow conversion is up 100 bips, and we remain on track to deliver 95 to 100% of EBITDA to cash for the full year. ROC, which is you have kept mentioning as our bugbear, we're up by 210 bips. Hopefully that trajectory continues, even on the strategic front. And I think that is the key to delivering good numbers, staying focused on the strategic pieces, staying focused on the basics and executing them well. We have outlets at 3.8 million. We had said split routes in all 1 million plus towns. Most of it is complete. We've got direct distributors in all 50,000 plus towns. That is complete. So outlets up to 3.8 million. A&P, we've upped the game in India. We're now close to 7. Costs, huge focus on them. Just as a perspective, manpower costs, we're getting leverage of top line now. On other overheads, 3 years back, we were 15% of sales. Now we're down to 8.5. Working capital India from 50 days where we started 3 years back, we're now down to 23. Innovation, we had guided for 5. We are now at 5.5. Premiumization working very well. Salt, for example, premium salts delivered 64% growth. They're now up to 10% of our portfolio. Beverages, again, the premium portfolio doing better. So Nikunj, all in all, a decent quarter. And I think the key has been focusing on the strategic priorities and executing them well.
Look at your growth businesses, Sampann, Soulful, Nourishco, Smart Foods. They are growing at 39%. That's the data with us. Smart Foods grow 39%, Sampann 47%, Nourishco 25% plus. These are good numbers. That's a high growth which is kicking in. But the core of Tata Consumer is still the tea business. And in the tea business, you are losing market share. You lost market share and some market share has been chipped off. So while the growth businesses are contributing, the mainstay, which is the tea business, if you lose market share, will they just equalize each other?
So Nikunj, I would just make a couple of points there. A, we are en route to becoming a total FMCG company and not only a tea and salt company, as I put it, and therefore the focus on the growth businesses, which are doing well. Now, coming specifically to tea and salt, let me just put the market shares in perspective. We had huge amount of volatility on the tea prices, and therefore, as prices of tea come down, normally the local players play a little bit more in the market. But that said, while you will see on a MAT basis a little bit of bleed on share, but quarter to quarter it is now stable. And I remain confident that now that we've got our infrastructure almost fully in place, we've still got to build out some rural distributors and powering it with A&P, I think we'll be in a good place to start getting the trajectory up. Quarter on quarter, now the shares are stable. On salt again, while you will see a little bit of dip on salt market share, just to put it in perspective, last year we were the first off the cuff taking price up, and therefore we gained value share mathematically. But as the other players came up on pricing, the whole value table has lifted, and therefore it's a relative term. But just as a perspective, September came in at a 38 share, which is a 12-month high. So the trajectory has already started moving up. Incidentally, when we started 3 years back, we were at a 30 share. So we remain confident that both the businesses, we're seeing volume growth. Tea is 3%, total foods is 6% growth. So we remain confident that we will get market share back.
The portfolio of Tata Consumer into two, tea and salt, the traditional business, everything else, the new high growth business. What kind of total revenue split which you have from the traditional business and from the new business? And since you are creating these new businesses right now, which is the FMCG business, the oil business, the packaged food businesses, right now, do you think the aggregate margins for the high growth businesses would be lower?
Yeah, so you're right, Nikunj. The aggregate margins for the high growth businesses are slightly lower than the sum total. But just to put it in perspective, broadly, ready to drink and Soulful are in the ballpark. It is Sampann which is slightly lower, but Sampann, as we get scale, as we build out procurement efficiencies, as well as do product differentiation on the front end, they will start coming up. But just to put it in perspective, whether it is Sampann, whether it is Soulful, whether it is RTD, we don't have capex investments, and therefore, from a return on capital perspective, these are phenomenal businesses. So high growth, high ROCE, slightly lower margin, but margin is work in process and it is trending upwards.
Sunil, I'm just curious to ask, what's been your observation at a time when we've all grappled with an uptick in food inflation? Any consumer trend that you can tell us about?
So, three things out here. I think basically, if you see tea volume growth, we said is 3%. It should be in the 5% range. Now, it's good news and bad news. A year back, we were in negative territory. We have come back into positive territory, but we are still not where we should be. So that's one piece. Second, if you look at rural overall, I think there was stress. Inflation was impacting the rural consumer. And on top of that, sporadic monsoon did not help. Manrega numbers, if you look at it, were trending upwards. But recent times, we do see things improving. If I look at one indicator, which I always look at, is two-wheeler sales have started to come back. So that is a good sign from a rural economy perspective. So all in all, I do think we are coming out of the slump. And I think we had said that in January of 2023, that is, we had said that we are starting to see a complete slowdown. And we are seeing an upward trend from here on, and that's what we are seeing. But for Tata Consumer itself, I keep telling the team, focus on what you can control. Make sure that you're executing to the T. Because even if there is softness, as long as you're executing, expanding distribution, focusing on market share, when the trend starts moving up, you'll be in a fantastic position.
In continuation with that, while I get your premium brands have done way better than the economy brands, what about out-of-home consumption trends? How's Starbucks footfalls been?
So overall, Starbucks, we are now in we have 370 stores. We have 49 cities where we are present. We've accelerated the store opening. We are now, last quarter, we opened about 24 stores. From that perspective, we are doing well on Starbucks. There has been a bit of slowdown on growth. It is not in negative territory. Overall, there's been a bit of slowdown in growth. But you have to remember, there has been a shift in the festival season. So I wouldn't read too much into it. I do expect that the out-of-home industry, especially coffee, will continue to be on upward trajectory. I think the ball is in our court as to how fast we can expand our footprint.
Morning, Mr. D'Souza. I also wanted to talk a little bit about your outlook in the international markets and which category you believe is going to lead growth here.
So international, I think, came to the party big time this quarter. Overall top line was 13% ahead of the total numbers. I would say we've got different fixes for different markets. Canada, where we are market leaders, we're on a very strong footing. There, the game is now to expand the portfolio, and that's work in progress. In the UK, we've always maintained that while we were good or we were decent in the black tea, the growth was in the fruit and herbals and specialty segments. The good news is we focused on it with the Good Earth and Teapigs brands. We're getting more listings, we're getting more distribution. The brands are doing well, and now we've got in September we've got a 10% share of fruit and herbals. Overall, while we have close to a 20% share in black tea, fruit and herbals we were coming from behind, so that has been strong. Number one. Number two is we've always said we've got opportunity to expand portfolio. So we've taken Soulful to the UK. We had to relabel it as Joyful because someone else had the Soulful name there. And we are listed in about 400 plus Tesco stores and doing very, very well. Same thing, we're getting very good reactions when we are approaching retailers in the US and Canada as well. US market was a bit of up and down with coffee prices now trending down steeply, and therefore a bit of discounting in the trade, which we've got to react to. But we're very confident. We put in actions into place, and we're confident that that will come back as well. We've always maintained that the international business, after we've right-sized the cost structures and focused on the growth drivers of basically tea, coffee, and now expanding portfolio with cereals, etc. EBITDA margin should be accretive to our total business, and that's the target.
I have the Morgan Stanley report in front of me. It talks about the ROE percentage. It was at 7 when we first started asking you about the ROE and how it is increasing. And it is estimated to go, according to Morgan Stanley, to 11 or 12 in 3 years. Will Morgan Stanley get it right?
I would hope to beat Morgan Stanley, Nikunj, simply because you're absolutely right. And that's what I maintain. And that's what I quoted. ROCE, which is another perspective, we're up by 210 bips versus the same quarter last year. That is a huge focus to make sure that we leverage what we have, continue to drive the top line, holding costs constant. If you look at all other parameters, Tata Consumer is up there. This is one we are maniacally focused on.
It is literally the case when it comes to Tata Consumer. There's always a gap between lip and a sip, because you missed the Bisleri acquisition by just a whisker. Now that would have been a big acquisition, and that in a sense would have really added a lot of capacity, would have given you different kind of a presence. Now that the acquisition is not going through, in terms of an appetite to acquire, how will that change? When I speak to some of your counterparts, and I'm not talking about FMCG counterparts, some of the peer CEOs of Tata companies, they are saying the following, that the repair work is over, the growth and the acquisition mode has started. Is that true for you?
I wouldn't comment about other FMCG companies or other Tata companies, Nikunj, but all I can say is we have always maintained that Tata Consumer, we want to build a large FMCG business, both organically and inorganically. Just as a perspective, we're sitting with 2,500 crores of cash. Inorganic is something which we are scoping on a constant basis. The whole idea is once you build the back end with the logistics, warehousing, etc., and you build the distribution system, we've got 4,500 salespeople and 3,500 distributors now. Now the pipeline is all there. Now it's a question of what else can you pump through the pipeline. The critical piece is to make sure that the expansion of the portfolio, especially inorganic, is value creating. It is incremental in portfolio, it's incremental in margins, and gives us more clout in the trade.
So as you expand and build your current high growth businesses, when do you think the J curve really will come for the company? Because right now you're in growth and expansion phase. 2 to 3 years, you will be able to build some of these brands bigger, maybe gain market share or create these new categories. So when will the large benefits of that start kicking in? FY25, FY26, FY27?
So Nikunj, I would say with most of the infrastructure laid out, most of the capabilities we've already invested behind the capabilities, whether it is digital, R&D, back end, we've got shared services going. Now the cost lines are pretty much stable. There's not going to be too much expansion on fixed costs going forward. So therefore, it's all a question of top line margins thereof flowing to the bottom line. And I would expect starting FY25 onwards, starting to see the real benefits come in. We remain extremely conscious that while I did comment saying that we've improved our EBITDA margins by 210 bips, we're still behind some of the FMCG market leaders. So we've actually benchmarked where we want to be every year. So you would start seeing FY25 onwards acceleration coming in.
Benchmark Nestle, HUL, or perhaps Britannia?
I would say the whole FMCG universe. We've got every single company laid out, and we know who's at what level. They range from about 17.5%, 18% up to 25. I don't think we're going to get to 25 very quickly, but one piece at a time.
So how soon before you'll go to 17? Let's look at the lower part of the benchmark.
In EBITDA margins, I would say in the next 24 months or so, 18 to 24 months, we should be at that level, Nikunj.
Yeah, that, I can see the packaging of gulab jamun at the back. So is that the Diwali surprise from Tata Consumer this time? No rasgulla, no laddu, but gulab jamun.
So just as a perspective, Nikunj, one of the categories in which we had not actually focused on, we needed to revive out there, was our mixes. And when we looked at the mixes space, one of the large spaces which we are not playing is in the sweet mixes. We were playing in the rava, dosa, all those kind of mixes, chila mixes, etc. But the dessert mixes is a huge portion, and it is very seasonal. So about 2 months back is when we've launched it, and we do hope to have a good festive season.
Well, so wonderful to have you on ET Now. Season's greetings from everyone from ET Now. All I can say is that it's just been such a classic turnaround for Tata Consumer that it's just been an honor tracking it, and every quarter we interact with you, you delightfully surprise us. So festival greetings, and next time we meet, hopefully it will be rasgulla, laddu and gulab jamun, all three.
Thank you, Nikunj. Always a pleasure talking to you and the team. Thank you.